earning, what it means, retained earning means the company's own profit. So if the profit is reinvested, it is known as retained earning. Then the company may also acquire finance as public money by issuing shares into the stock market. They also can take bank loans and they can also issue debentures. But which one or which mixture will be the best mixture for getting debt, and what will be the mixture of debt and equity that is being finalized by financial officer? So the role of financial manager is to assess the records, to identify the need of finance, how much, from where it can be taken, and what are the risks and return associated with it, and what will be the cheapest way of getting finance for the organization at a particular point of time. And financial manager also compares the projects available to take up. So let's say an organization have 4 or 5 projects. So financial officer's duty is to identify which projects are going to be beneficial to take up for the organization. So that way we can see a part of accounting or accountant. There are 4 types of people who are also associated with finance department. One is internal auditor, who completely checks the internal documents related to money or finance or transaction on a regular basis. Then the controller or chief accountant, who is the head of all the accountants, treasurer, who controls the liquid money or cash, and a financial officer who takes the decision related to funding of the business. This is an organogram, how generally the organization distributes the authority. So at the top, you can see the board of directors are there, then the CEO, then the president and chief financial officer. So the financial officer is the person who takes decision related to finance, and finance officer controls the chief auditor, internal auditor, chief accountant, as well as the treasurers, and the head accountant also controls the management accountant, financial accountant, and tax. So this is just an organogram. Who is controlled by whom? Which is the higher position of accounting and which is the lower position in accounting. Now this is accounting concept. When we record the entries into the accounts book, we generally refer to accounting concepts. Now accounting concepts are nothing but the rules and regulation according to which we record the transaction in the books. We have 2 accounting information system here, or 2 accounting concepts here. One is known as GAAP, that is generally accepted accounting principle. Now GAAP we use when our business is established within the country, whichever the country is. If you are not doing business in abroad, in outside of your country, you can follow the rules and regulation which is prescribed in generally accepted accounting principle, which is known as GAAP, GAAP. But there is one more accounting information system that is available internationally, that is known as IFRC, Internationally Referred Accounting Standard. So if we are doing our business outside our country also, then we follow the international accounting standard. All right. So these all are the accounting concepts. Now this all accounting concepts say something about the characteristics of accounting. So when you are studying, you must have a brief idea of all the concepts which are available in the accounting. Just like a going concern concept says that the accounts must go on, but after every financial year, you must also conclude. So you cannot afford keeping 12 months. You need to conclude your data and prepare your financial reports. Similarly, consistency concept says that you need to be very consistent. Either you follow the GAAP rules or you follow the IFRC rules. But whatever the rules you are following, you need to follow it throughout the financial year. Accrual concept says you need to enter all the transactions which are taking place in present, or you are sure that it is going to take place in future. Let's say that there is a contract of transferring goods or selling goods in a future date, but the contract is taking place today. That means you need to also enter that date. Or maybe let's say that you have sold out certain goods, but you have not received money. You are receiving money in the next year, but in the present date, you need to enter the data that you have sold out the goods. So, actual concept says maybe the transaction is not complete in the present time, but still you need to enter the data as it is already initiated. All right. Now, business entity concept says that if you are spreading your business across the countries or across the states, you have 8 branches, you have 10 branches of your organization, does not matter. You need to prepare a single account entity concept, which says your business is one. If you are working under the same umbrella, under the same trademark, and you are producing 5 different goods, let's say you are in hotel industries as well as in cloth industries as well as in medical industries, but you will prepare a consolidated single balance sheet for the entire organization. That is business entity concept. If your organization is registered with a single trademark name. Similarly, money measurement concept says the transaction has to be in form of money. Goods must be evaluated in form of money. So that is why you cannot say I have sold out love or care or affection, because you cannot evaluate these things in form of money. Your feeling cannot be actually termed in form of money. So it is not sellable. So you cannot transact. You cannot sell out your own hand because you cannot exclude it from your body. So whatever is sellable, whatever is detachable, whatever is movable, wherever you are permitted to uh, deliver or transfer the ownership and you are receiving money in return, that are only can be considered as transaction. Now the next one is accounting period, which says generally the accounting period is for 12 months and generally it starts at 1st April and ends at 31st March, but not necessary. You may keep it from any day to any day, but it has to be of 12 months. Generally, in most of the countries, we pay yearly tax in the month of April. That is why we close our accounts on 31st March. And we start our first or fresh accounting from 1st of April. So generally a financial year, let's say it is 2024. Now, if someone has started business, so the financial year for 2024 is going to be 1st April 2024 to 31st March 2025. Cost concept or historical cost concept says whenever the transaction takes place, you need to evaluate the product or services on the present times valuation. Let's say today I am buying a pen and the cost of the pen is 10 rupees and I promise to pay it after 1 month. And let's say after 1 month, the cost of the same pen is increased by 2 rupees. It is now 12 rupees, but I need to pay only 10 rupees. Because when the transaction took place, I need to see the cost of that time only. So that is cost concept. Similarly, matching concept or dual aspect concept, these two you need to understand very clearly. Matching concept says actually you don't need to have any internal check or internal audit because revenue and expenditure has to match at the end of the day. So if your right side, which is the expenditure side, and the left side, which is the earning side, is matching, that means automatically you'll be able to understand that your accounts are correct. So there are certain aspects that when we prepare the accounts, we will come to know much better. So matching concept for right now I am leaving. So matching is nothing but a match of the facts and figures, which will help you to understand whether you have prepared correct accounting or not. Similarly, dual aspect says in accounting, we prepare each and every transaction, we enter it twice. For an example, let's say the transaction is that myself, Shushmita, has purchased a pen from Mr. X. Now, while writing this transaction in my book, I will write it twice. In the first line, I will write that I have purchased a pen from Mr. X, and in the second line again, I will write that Mr. X sold me a pen. I will always write twice, a single entry, which will ensure that there is no slip of pen, there is no mistake. If there is any contradiction in this two statement, I need to again look at the receipts. So that is the dual aspect concept, which also gives a clarity that all the transactions are correct. Materiality concept says that whatever is sellable, that only you can sell. As I said, that the love, affection, care, and the things which is not sellable is not a part of accounting, is not a part of transaction, or it is not materialized. In short, realization concept says whenever you are selling, let's say, for an example, I am telling you that I am going to sell you my car and the cost is 1 lakh. And I'm also saying the cost is 1 lakh, but I will sell it in 10% discount. That means the realization concept says the amount which is going to be realized if someone is buying that car is 90,000. So you need to consider 90,000 as the realization amount instead of 1 lakh rupees. And the last one is conservatism concept, which says that you cannot put your rules into account. It is very rigid. It is clearly stated what and when. You cannot make any changes at any point of time with the time. Till the date we are following the accounting concept of accounting rule, which is founded before 100 years, and we are following, we are not able to change because it is that accurate that there is no scope of changing. So that is why we say mostly it is unchangeable. We need to learn the method, modification. So these all are the concepts. It is available in your block 1 in very detail. I have just explained you, briefed you. I hope when you read out these concepts again, it will be very clear to you. If you want explanation of any of the topic at this point of time, I am waiting for next 1 minute. You may let me know. I am assuming it is clear to everyone as no one is asking any question. All right. So as I said earlier also, there are two accounting concept standards. One is GAAP, which is generally accepted accounting principle, which we follow if we are not doing any import-export business. We are doing business within our organization or territory. We follow international financial reporting standards when we do across the globe, when we do business across the globe. So you need to read out the GAAP and IFRC. There are 13 accounting standards. The names are already available in your book. What are the rules? You may go through it. So mostly GAAP is followed when you are starting the business. IFRC we follow when we spread it across the world. Now this is the basic equation. As just we have discussed in the previous slide, matching concept. What is that matching concept? The company says whatever the assets you do have will be equals to the liabilities you do have and the capital that you do have. So this is the surety. If you are able to jot down all the assets and you are able to jot down all the liabilities, including the capital, you will see the value in terms of money is going to be equal. If there is inequality, that means some data are either missing or maybe manipulated or maybe hidden. So every time, whenever you prepare accounting, you will see there are two sides of every accounting, that is debit and debit and credit amount is going to be equal if you are preparing it correct. So at a later class, maybe tomorrow, we'll see how matching concept takes place. Now, as I said, that double entry system means every transaction has to be recorded twice in the books of accounts. Two times. Once in the debit side, another one is in the credit side. So every transaction has two aspects. Let's say I have purchased goods from somebody. That means you need to see that from where the money is collected and where the money is being paid. So if I am buying goods from somebody, that means somebody is selling goods to me. So there are always two aspects of one transaction. And in accounting book, we always enter each and every transaction twice. And if there is any contradiction in the statement of debit and credit, we may again verify the vouchers or the receipts and we need to make it self-check method to avoid the errors. All right. So every transaction has to be placed in twice in the debit and credit form. Now, how? For that, the first you need to understand the classification of account. To classify the transaction, first you need to learn what are the types of accountancy or accounts available in every organization. Generally, it is of two types. One is personal account and another one is impersonal account. And further, impersonal account is divided into real and nominal. Now, from here, you need to be very focused. Otherwise, if you're not able to learn the rules, you won't be able to prepare the accounts. The theory part, the introduction part is over here. Now, you need to focus on the rules of each and every type. You need to identify the type of transaction and you need to enter accordingly. Let's say which is personal account. Now, personal account means all those accounts which are kept with the name of a person, individual, or it is with the name of a company or XYZ private company limited is a personal account, is a personal account. So and so's account is a personal account. So the accounts which is kept by a person, a human being, as well as a company would be a part of personal account. We can give example. Tata Steel Limited is a personal account. TCS Company Limited is again a personal account. Mr. X's account is a personal account. All right. So all the accounts which is holded by a bank, by the name of a company, by the name of an organization, or by the name of an individual. So it is the basic of the entire accounting system across the globe. These are known as golden and it never You need to learn it, you need to memorize it, you need to apply it when you are keeping or recording the transaction in the books. So for the personal account, the golden rule says entering any personal debt, keep the giver. Just for an example, Hari is in the receiving end, Ram the all on the credit side. This is the first golden rule. You need to always keep it in mind. Alright. Now the personal account can be for a natural person or artificial person or representative. Why I am saying that natural person means a person like you and me, a natural person who can born, who can die, who can take breathe, who can take their own decision are the natural person. Alright. The personal account can be for an artificial person too. Now artificial person means all the companies. Why they are the companies called artificial person? Because they cannot have life like us. They cannot breathe, they cannot think. But at the same time, they are called as person, artificial person, because they can hold property. Company can hold property with its own name. Company can sell out property with its own name. Company may enter into any transaction or any contract with its own name. So that is why all the companies, joint stock companies are known as artificial person. Just like our legal rights, all the companies' legal rights are also protected. And representative means if a person is representing an organization, his account is also considered as personal. All right. So these all are the example. Natural person means Mr. X, Mr. Y. All the debtors, all the creditors are a part of personal account. Capital is here. You need to also see this capital account. Capital account means the investment which took place in the organization is known as capital. So capital belongs to few people who are investing in the organization. That is the capital account is a part of personal account. And drawings. This I will discuss in the future date. So here I can just say, just with an example, drawings means the personal withdrawal from the business. Again, I can explain drawings with a small example. Let's say a manager is withdrawing money so that with that money he can manage his transportation cost, and that transportation is used for attending a business meeting. Then it is an office expenditure, and it is withdrawing some fund from the organization, and with that money he is managing his personal traveling with a family, will be known as drawings, because he is withdrawing money from the business and he is utilizing that money for his personal affairs. So the owners of the company, if they are using the company's fund or capital for their personal purposes, that amount will be known as drawings. So this capital account and drawing account additionally will be a part of personal accounts. You can always take a note, because when the lectures are going on, you may think that I can memorize or I can recall each and everything which is being just explained, but after some time you may forget. So I'm requesting everybody, whichever the information is new for you, please note it down shortly for the future references. Now artificial person, as I said, it is all the organization which is registered under the Companies Act, whether it is a bank, whether it is a company, whether it is an NGO or any cooperative society which is registered under the Companies Act would be termed as artificial person. And representative, as I said, it may be a representation of a group. So the personal account also are all the outstanding expenses, prepaid expenses, accrued income, and income received in advance. These all accounts would be a part of personal account. Now this is the second one. Now, real account is a part of impersonal account. As I said, just going in the first slide here, the major division is personal and impersonal. So, personal means all natural, artificial, and representative person. Now, impersonal account further divided into two parts: real accounts and nominal accounts. So, I am going to discuss real accounts now. Now, real account means all the tangible and intangible goods which you can see, feel, and you can make it or you can convert it in terms of money is a part of real account. Then machinery, then infrastructure, which can be felt, which can be touched, and which is in physical form. All the assets are a part of real account. All right. So if a person's business is all about holding some household goods in his shop, so all the sellable goods are a part of real account. The shop itself is a real account. The furniture associated with that business is a part of real account. Even the stationery which is being used are a part of real account. So whichever is in a tangible form, whichever are the assets are a part of real account. Only intangible means here it is goodwill. Other intangible are not a part of real account. So better to understand real account as all the tangible goods. Now what is the golden rule for real account? Debit what comes in, credit what goes out. Remember the first rule? The first rule was related to personal account, debit the receiver, credit the giver. This is the second rule. Debit what comes in and credit what goes out. So for an example, let's say Mr. Joe purchased furniture of 75,000 for cash. Now for Mr. Joe, what is coming in? He has purchased furniture, so furniture is coming in. So in the debit side, there will be furniture account. Credit what goes out. What is going out from Mr. Joe? The money. So cash will be in the credit side. So if you are identifying certain accounts associated with the transaction are real accounts, then the rule says debit what comes in this example are coming in and cash are going out. Now the nominal account. Now nominal account means all the accounts which are intangible in nature. All right. So intangible, here you can use a part of goodwill. All the intangible accounts are nominal. Let's say income, profit, patent, copyrights. These all are a part of nominal account which cannot be seen but which can be termed in form of money. So let's say rent. You are paying rent in form of money, but can you see rent? Just like you can see the furniture? No. So that is a part of nominal account which cannot be seen, but it is there. You can feel it. So rent, salary, these all accounts are known as nominal account. And the golden rules again. The third golden rule and the last golden rule. Debit all expenses and losses, credit all incomes and gain. You may debit whatever the losses you do have. You may credit whatever the gains you do have. So let's say you are paying rent. So that means it's a loss for you, loss of money. So rent will be in the debit side and cash will be in the credit side. So again, I am repeating all the three golden rules. You can please note it down somewhere or you can just memorize. For the personal account, debit the receiver, credit the giver. For and credit what goes out. And finally, the third one is debit all expenses and losses, credit all income and gain. So these three are the three golden rules. So for every transaction, you need to identify the type of account associated with that particular transaction, and then you need to follow this golden rule for entering those transactions in the accounts book. This is some example I tried to put in front of you just to distinguish what will be the rule. Let's say the first example, rupees 15,000 cash invested in a business by Ram. Ram has invested 15,000 rupees in the business. So there are two accounts, one is cash, one other one is capital. Now cash is real and capital is personal. So for the real account, the rule is debit what comes in, and for the personal account, credit the giver. So what will be the ultimate transaction? Cash account debit to capital account. All right. So here, these transactions we are going to learn in the next class in detail. But for now, you need to know, you need to go through your block. There are certain transactions already given. Try to identify by the name which kind of account it will be and what is the rule associated with it. Let's say I am taking the third example here. Paid rupees 1,000 for salary. Now I am paying 1,000 as salary. That means two accounts again are associated with it, salary account and cash account. As I am paying cash account is associated. I am paying as salary, so salary is associated. Now cash is a real account and cash is a real account and salary is a nominal account. Now for the salary, you need to debit the expenses and losses, credit all incomes and gains, and for cash, as it is a real account, the rule follows credit what goes out, and it is 1,000 and 1,000. If you have real difficulties in understanding the simple calculation, you may understand that always debit whatever is in the receiving end, always credit whatever is in the giving end. All right, for an example, let's say rent is paid. That means in the rent account, the money is credited, so you keep rent in the debit side as cash is going to be reduced, you keep it in the credit side. If you are a science background student, you are having difficulty in identifying the particular accounts, just always follow the receiving end, whosoever is, keep him or keep his account in the debit side, whosoever is in the giver's end, you keep it in the credit side. Now these all things or these all steps you need to learn in the next 4 classes of your MCS 225. These all are the steps of accounting. Journal entries are the first step when the transaction takes place. Then we have ledger, trial balance and final accounts. These all 4 another steps will be followed at the end of the financial year. Only the journal entries we do immediately after the transaction takes place. The rest of accounts, whether it is ledger, trial balance or final accounts, we prepare at the end of the financial year after 31st March of the financial year. So today I am just going to review only the journal entries. Rest of steps we will follow in the next class. Now, this is just the format of entering the transaction. At the heading, you need to write journal entries in the books of. Here you need to mention the name of the company. And for the year ending, here you need to mention the last date of the financial year. This heading is very rigid. You cannot make any changes in the wordings. You need to write the heading just like it is mentioned here. Journal entries in the books of XYZ, whatever is the company, for the year ending 31st March, whichever is the year. How to upload the transaction? The first column will be date, then will be particulars. Here you need to enter transaction. Ledger folio is just the reference number for ledger, and as you are writing each and every transaction twice according to double entry system, so debit and credit. At this point of time, I need to take your queries. If there is no query, then I will teach you how to journalize the transaction. So I am giving you 1 minute time so that you can ask if you have any query at this point of time. Yes, you are expected to answer what are the accounting concepts. You are expected to answer the types of accounts or the rules related to the accounts. These kind of questions may be asked, and the practical questions like to enter the transaction will also be asked. So I am going to teach you next how the transaction has to be entered into the accounts book. But I would like to know whatever I have just explained, is there any question related to that? Otherwise, I will move ahead. We still have 15-20 minutes. All right. Anybody else? Any doubt? No doubts. So let's start with journalizing the entry. I will try to show you some examples how the journals has to be entered into the books. I have already written the format and this is the question. As because there is a constraint of time, I have taken a question which is already available in your book so that I can show you few entries and few entries you can refer from your block 1. So this is the entry. You see Mohan's transaction for the month of April 2005 are given below. So whichever the transaction, it has to be entered in the books of Mohan. And you are supposed to write journal entries. So journal entries means the transaction entries immediately after the transaction takes place. All right. Now, if you see, the first one is saying Mohan started business with cash and the amount is 5,000. Now, how to take the transaction? Mohan started business with cash. So the cash is invested in the business as capital. So we can see there are two accounts associated with this particular transaction, that is cash and capital. All right. And here we can see cash is a nominal account and capital is a personal account. So according to that, cash means debit the receiver and nominal means credit what goes out. So, and if you are not able to understand the golden rules immediately, simply you debit wherever the money is going in and you credit from where the money is going out. But for the first transaction, I will request you to memorize it or remember it because this is one of the transactions which does not follow the golden rules. It is the exception. All right. So in case of whenever a money is invested in the business as capital, the entry will be always in the debit side cash and in the credit side capital. Now, how to enter? I have already told you that these all will be the heading. First, you need to put the date and then particulars, then ledger folio, then the debit amount, then the credit amount. Here I have written rupees because it's the Indian currency. You need to mention your own country's currency name here. So whatever it is, dollar or whichsoever it is. Here you need to mention that currency name. How to mention the date? In the format I have mentioned. So it is 1st April 2021. You need to write the way I have written. So it is very rigid. You cannot make any changes like you cannot write 1st April 2021 in terms of words. You cannot write. You need to mention it like this. So how to enter? I am saying for this particular entry, cash account will be in the debit side and capital account will be in the credit side. So from the extreme left, you need to start writing for the debit entry. So cash account. Account here would be written as A/C. This is the short form of writing account. So cash account. Now debit. How will write the debit? I will put all the dash and I will reach to the extreme end. And debit is denoted by D and small r and dot. This is debit. Cash account debit. This is the way of writing the debit side entry. Cash account debit. The amount is 5,000. I have already written few things so that it will be easier for me to manage the time. All right. Now 5,000 rupees. You see the amount you need to always write in right aligned, right hand side aligned. That will help you in calculations. So cash account debit now. Capital account is in the credit side. Now, how to write the credit side? You need to mention TO2. This is compulsory. We do not write just like DR, we will not write CR for credit. Rather, we will mention TO2. 2 means credit. So, cash account debit to capital account. This ensures that cash account will be in the debit side, capital account will be in the credit side, and the amount is going to be similar, because if person is investing 5,000, that means the company is receiving only 5,000. So you'll see debit side and credit side amount is going to be similar. Now, if you were writing somehow somewhere 505, somewhere 5,000, later on you'll be able to identify. And you can make correction by seeing the looking at the receipt. So that is why twice we always enter the amount as well as the transaction. Now let's say you are not a person from commerce background. You have not exposure to go through any account document. It would be very difficult to understand what I have written just right now. Cash account to capital account. What is that? A non-commerce student will not be able to understand. So, therefore, to make it easy in accounts, always after every transaction, we write it as a sentence also, the transaction. So, here I am going to write being the business started with cash, or we can write being the money invested in the business as capital. Now it is more clear whether you are aware of the commerce entries or not, but you can at least go through, by going through the sentence, you can be more clear what this transaction actually tells. So after every transaction, we write the sentence, and this sentence is known as writing narration. It is known as narration. So writing narration is compulsory for after every transaction. And then you need to draw a line for the particular section, which is just segmenting or dividing, separating one transaction from another. So the first transaction is already done. So I can put a line right now, and my first transaction is recorded immediately. Let's say what the second transaction is stating. On 2nd April, deposit in the bank 500 rupees. Now, there are again two accounts. One is bank, one is cash. So out of the cash box, the person Mohan have deposited 500 rupees into the bank. And both are personal accounts. So debit the receiver, credit the giver. So who is receiving the money, bank or the cash account for this transaction? Who is receiving the money? Bank is receiving the money or bank is paying the money? The statements are saying deposited in the bank. Amount is going right. No. It is, yeah. Mohan is in the credit side and bank will be in the debit side. Debit the receiver. So bank account is receiving the money.
Bank is receiving the money, so bank should be on the debit.
Yes, bank should be in the debit. And what should be in the credit? You are right. Bank account
from the rule,
should be in the debit.
Receive.
Yeah, debit the receiver. So bank is the receiver here. So bank account debit. Now, who is losing the money? Mohan is losing the money from his cash account. So cash account will be in the credit side here. And now you can write the narration being the money deposited in the bank. And the entry is right now clear, and you can again draw a line to make it separate. Alright. Now the third is saying furniture purchased for cash. So furniture is real account, cash is nominal account. So what I am receiving furniture, and what I am losing, I am losing the money. So the simple on that way also you can think of. So for debit what comes right because furniture is coming in. And what is going out? That cash is going out. So to cash account. So for 200 rupees, I have already mentioned. So being furniture purchased for cash, and the entry is done. All right. Now let's see the fourth one, purchased goods for cash. And the fifth one is purchased goods. Now, how you can differentiate these two entries? Can anyone has any observation? Entry number fourth and entry number fifth. Fourth one is purchased goods for cash, and the next one is purchased goods. Any observation how these two statements are different? Mm-hmm. Yes. Very good, very good. So you need to understand unless and until it is mentioned in the transaction that the cash is paid immediately, you cannot assume that the payment has been done. So if the statement says that the goods are purchased, you need to assume it is on credit. You cannot have assumption that it is on cash from your side. So whether it is mentioned or not mentioned, you need to be very careful unless and until the word cash is mentioned. You cannot take it for granted that the transaction is a cash transaction. All right. So again, here you'll see how these two statements can be different. Buying goods. Now you need to remember the name of the goods are not mentioned here. So where the names of the goods are not mentioned, just like furniture is mentioned, so I have prepared an account with the name furniture. But here the name of the goods are not mentioned, so do not write goods account. Rather, if the names are not mentioned, you write purchases account. Alright, where the name of the goods are not mentioned, you mention it as purchases account. Do not write goods account or something else. So we are buying and we are buying for cash. So cash is going out. So cash will be in the credit side. Alright, now we can also write a narration that being goods purchased for cash. Now see, if you go through these four entries, this is covering my first page. My first page is over here. So wherever your page is going to over, you need to write a total. See, the total is 6,100 in both the side. It ensures that there is no slip of pen. There is no mistake in the amount section. And if there is any mistake in the totaling, immediately we will go through all the entries and it will identify where you have done a mistake. So for every page, you need to total. So here I have written total C oblique F. This C oblique F is referred to carried forward. So for every page where it is ending, you need to total the sum of the amount. And in the next page, again you need to write total borrowed forward and the same amount you need to continue with. So 6,100 here also you can see 6,100 I have mentioned. Now the next transaction is purchase goods. How it is different? Purchases account will be in the debit side as usual because you were buying goods. But here cash is not going out. because cash is not paid immediately. So rather, as the cash you are not paying immediately, you write creditors account. Why the creditors account? Because you need to pay in a future date, and for that you need to remember the name of the person. So whatsoever would be the name of that creditor, you need to mention here. Alright, in this question the name is not available, that's why I'm writing creditors account. I am not replacing it with cash because cash is not received. So I need to remember the person to whom I need to pay in future 1000 rupees. So here I am mentioning the name of the person or it termed as creditors. And here we will write goods purchased for credit. It also ensures that at a future date you need to pay out 1000 rupee. Okay. Now you see the next two entries. Goods sold to Measures Ram and Company for cash and goods sold on credit to Ramesh. Now again one entry related to sales are for cash and the second one is on credit. Now you let me know if you are selling somebody anything and you are immediately receiving cash, do you need to remember the person's name further? If you are receiving cash immediately, the transaction is completely over. Do you need to remember the name of that person anymore? No, no, we don't need to remember. Right, very good, very good. Not necessary. Now you let me know, suppose the amount is not yet received, we need to definitely remember the name of the person so that I can claim my money in a future date. Yes. So now see the first transaction, goods sold to Measures Ram and Company for cash. Here we will mention what I am receiving. I am receiving the cash. So I am keeping it in the debit side, cash account debit, and I am writing in the credit side to sales account because again I don't know what goods I have sold out. So if I do not know the name of the goods, I need to mention it as sales. Just like purchases, I cannot term this as goods account. So we can write here the narration that goods are sold for, sorry, the spelling error, sold for cash. All right. Now here I have not mentioned the person's name because it is not needed. I have received the cash. I have sold out the goods. I have received the cash. The transaction is over. Now in the next one, as it is a credit transaction, I need to remember the name of Ramesh because in a future date I have to collect money from him. So how the transaction is going to differ? So I cannot write cash account because I am not receiving cash. Rather, I will write the name of the person who will pay me in future. So Ramesh account will be debit side, in the debit side instead of cash because I have not received yet cash. And as usual, sales will be in the credit side because goods are already sold out and moved out from the seller's place. And the narration will be goods are sold on credit. We can also further mention to Ramesh. We may not also mention. So see the difference. In the first account, cash account to sales, no mention of the data, but here we are mentioning Ramesh to sales so that I can identify that I need to collect 300 rupees from Ramesh. Now here if you see the next transaction, yeah, here Ramesh is paying 300 rupees. You see, in the first transaction, it was sold in credit on 24th of April and 28th of April, the person is paying in the money. Now you can write cash account in the debit side. Alright. So cash account right now you can put it in the debit side. Now you are receiving the cash. And from whom you are receiving? You are receiving it from Ramesh. Sorry, I have not written 2 here. So 2. Now you can also mention that being cash received from Ramesh. Now you look at the entries. Ramesh is here in the debit side. Ramesh is here in the credit side. Debit credit is cancelled, so ultimate entry will be cash to sales after receiving the cash. But it is in the two step in the two different dates. Now I think we have two entries. See, both the entries are for payment. One is the payment of rent, another is in the payment of salary, and both took place in the same date. If two transactions are taking place in the same day and they are similar in nature, you can write a single entry for both. Just right now I am writing just to show you that I'm paying rent. So rent is on the debit side, rent account debit, and the amount is 100 rupees. I am also paying salary, so salary account is debit. And how I am paying? I am paying through cash. So my cash is going out. So cash will be in the credit side and the amount is 300, 200 plus 100. So debit credit has to be equal. So I'm paying rent 100, salary 200. So altogether cash 300 is going out. Now we can write narration together. It always starts with being. Being, rent, and salary paid. You can also write for cash for more clarity. And here my transactions are over because it's a very small question with 10 entries. So my all 10 entries are over here. Now once it is over, you need to write grand total and you need to write the total amounts. And again, this is a matching concept. Just I have explained you. So matching concept says always debit and credit has to be equal. And it is for the assurance that your amounts are written correctly in the correct place. So always write that total. It is for you that you have not made any mistake while entering the entries in the books. So journal entry will look like this. For every date after just the transaction took place, immediately you need to enter into the books of account pay wise. There should not be any slip of transaction. So this is the way of writing transaction. So here I think your explanation for block 1 is over. Now it is your responsibility to go through each and every topic mentioned in the block 1, and tomorrow you let me know if you have any doubt in any of it. Mr. Waju Usman, would you like to say something?
No, ma, there is no question.
No question? Are you clear?
Yes, ma.
Are you able to understand all the explanation? Yeah,
Yes, ma.
thank you so much. I think everybody is very clear. So thank you so much. And we will see you in the next class. Tomorrow we'll have in the same time the next class. All right. Thank you. I wish you will all go through the block 1 today. And come prepare. We will discuss block 2 tomorrow.
Ma'am, Bashir has raised a hand. Bashir, you have
Bashir,
any question?
do you have any question? No, he is messaging thank you, ma'am.
Okay. So then it is fine, ma'am. Thank you for the class today. And
Thank
again,
you
as
so
per
much.
schedule, you will be taking another class also tomorrow
Thank you
on
so
the
much.
afternoon. Yes. Thank you, ma'am.
Good,
Thank you so
good day,
much.
everybody. Good day, ma'am.
Thank you, ma'am. Thanks.
Thank you. Good day. Bye bye.
रोहित रिकॉर्डिंग बंद कर सकते हैं